So, what the insurance companies don't tell you, how they work, how they actually make money, and why you should be covering yourself and getting the best out of your insurance policy. Now, I know insurance is a boring topic. Nobody really wants to talk about it. And it's just a topic that most people don't understand and they honestly stray away from. So, I'm here to educate you guys, make sure that you're fully uh, understand, make sure you're fully knowledgeable about the industry, how it works, how they make money. Because if you're going into any business, right, you want to know how they make money. You want to know how that business operates. You want to know the systems and flows, and you also just want to know where you can benefit within that business itself. So I'm gonna go over a few notes here. For one, insurance companies do not lose money, right? When you see places like California where they have crazy fires, or places like Florida where crazy hurricanes happen, they don't lose money because for one, people do not understand when to file a claim. They don't have the coverage to file a claim, and they're just losing their insurance policy. So this is honestly on the fault of the agent. Most agents don't really give decent advice. They don't tie the advice that they give to other people with your direct situation. So they're not advising you. They're more just shipping out a policy that you already don't understand. They're going to give you in Texas 30, 60, 25. They're going to give you the base limits. They're going to give you base coverage on your home. It's going to be actual cash value. They don't even tell you the difference between actual cash value and replacement costs, things like that, right? So most people who buy just don't know what they're getting, and that's my job, right? I'm the one who's supposed to give you what you're buying, why you're buying it, and how it's going to work at claims time. Because for one, if you're ever in a situation where you have to file an auto claim and you have a 2020 Mercedes, right? But you have 30, 60, 25, and you're wondering why they're only going to pay 25,000 for, you getting hit by a person with no insurance. Well, you're not going to get your car covered. You're not going to get your car back, right? So insurance is supposed to put you, the definition of insurance is stabilizing your way of life and your standard of living within before you even had a claim, right? So where you had the claim before, however you're living, however you're driving, however you were moving, it's supposed to reinstate that way of life after the claim is filed and after the claim is processed. So a good example of this would be, if I was driving, say I had that Mercedes and I had 250, 500, and it fully covered my Mercedes, well, it's almost like the accident didn't even happen, right? Because insurance stepped in and it took care of those liability claims. So, for one, how do insurance companies make money, right? So, there's risk pooling, right? They call it the law of large numbers. Now, this is going to be taking a demographic or a state or a country or a county or a city and basing how they move, right? When I mean demographic, I don't mean gender, I don't mean race, I don't mean sexuality, I don't mean marital status, but based on the demographic of people within the area, there could be more accidents, there could be more house fires. It's just that the location, the actual people that are involved in those claims. Now, most of the time people don't have enough coverage to cover their car, to cover their valuables, and they only care about the coverage when they have things that are super valuable. Like if I had a Lamborghini, I'm definitely going to have 500, 500. If I had a watch, I'm definitely going to, or a Rolex, I'm definitely going to have a personal articles floater, right? So things like that, and things like that most people don't even understand. They don't even have coverage or aren't informed about what's really out there. So risk profiling, a lot of people don't make claims. It's about 100 to 1 of the people that are paying premiums and the people that are actually making claims because they have the proper insurance. So, again, it's a matter of who you're getting your insurance policy from. How are they actually educating you? Are you questioning them on what they're giving you? Or are you just going with, hey, this is the cheapest price? All right, cool. Let's do it. That's not how this business works. And that's not how you need to be protected whenever it comes to your finances, whenever it comes to your family, whenever it comes to your home, your personal property, your car. There's everything that can be protected within your insurance policy should not be cheap, because if you get cheap, you're going to get minimum coverage. Again, minimum expectations. I said this in the last video. You're going to get minimum everything. So the way they write people, they look at your underwriting guidelines. Now that could be, we're only going to insure people that have had one accident within the past 5 years, right? That's based on different companies. So that's how they judge the insured. That's how they give you the policy, and that's how they price as well. And then also with the money that you're investing, they also invest it. So it's just like a bank, right? Whenever you go to fractional reserve banking, then that bank only has, 10% or a portion of the money that's actually allotted within the account, that's the same thing with the insurance company. So they're going to take a percentage and invest it back to keep making gains every single year. And I mean, there's some insurance companies that are making at least 12 to 13% year over year, which is crazy, right? Like you couldn't even get APY account with that, or a high yield savings account, with that ratio. So it's very, very important that you understand what you're buying, why you're buying it, how the company actually works. Because if they're investing your money and you're just blowing away money, you're just feeding the system, right? But if I had 30, 60, 25, and I'm just throwing away $300 every month, $200, $100, whatever, just so I can make sure I'm not, charge an extra ticket whenever I'm pulled over, then I'm moving at a loss aversion um, pace. Essentially, I'm putting myself at risk just because I want to save more money. When really I'm gonna be paying $20,000 versus saving the extra $20, or versus spending the extra $20. When the claim happens and I owe $20,000, and who's gonna be paying that? Whose pocket is that gonna come out of, right? So things to think about, right? And for one, some people pay more, right? Some people insurance's premiums are through the roof, and it's all based on your credit score, your age, location, claim history. If you file a lot of claims, if you file a lot of pointless claims being, hey, I have $1,000 deductible on my car, right? I got hit by a rock and it dented a part of my car, but it's costing $500 to fully repair with cost and labor, right? Essentially, whenever they pull out a dent, they're just putting a suction cup on there and yanking it out. $500 cost and labor. Now I'm gonna file a claim. No, no, that's not how this works, right? If your car is drivable and say it had hail damage, or say your windshield got broken, whatever, if it's not above that deductible limit by a substantial amount, there's no reason why you should be filing a claim. It's hurting your insurance premiums. It's hurting your rates whenever you go to different companies. Because some people think that, oh, if I had 5 claims with this company, I can go to another company and they won't give me the same premiums. And I'll be paying cheaper just because I go to this company. Well, no. Every time you file a claim, you stick with the same company. Of course, you want it to go off within the next 3 or 4 years. But if you move companies, you're only going to be paying a surcharge, and you actually risk getting lower coverage because you'll keep chasing the lower premium and end up going to a place like Fred Lawyer, or places that insure lower quality and lower value clients, because they always file claims, they always have accidents, they always have tickets. It's a very, very common theme within the law of large numbers, right? So that's huge. That's huge, honestly. Coverage and liability. So most agents will tell you, hey, you have full coverage. Ask yourself, what does full coverage even mean? Who informed you of full coverage? Did they ever tell you, oh, full coverage is blank, blank, and blank? Or full coverage is this, and this? Or did you just hear it from somebody where it's, oh, I have comprehensive collision? That's not, that's full coverage by state laws, but that's not full coverage for your situation. So that could be, say I own a home and I have 2 cars and I have a kid, right? Full coverage is, okay, I'm gonna have my cars at proper liability limits. They're also gonna include the personal liability within my home. So I have personal liability there that can protect me in the event of any lawsuits, right? And we talked about that in the last video if you need to go watch it. Um, if I have a kid, I'm gonna make sure that we have some type of life insurance policy for them so they can start stacking money. By the time they're 18, they'll be able to have more income than 95% of 18-year-olds, right? And then I'm gonna also make sure I have a personal umbrella, because that umbrella is gonna give me extra coverage. So if my kid is ever involved in something, there's any medical bills that can't be paid, if there's anything that happens to my home, or anything that happens to my car, any sue or lawsuit that comes about, I have full protection. Right now I'm sitting with 1.5 million to $2 million in personal liability coverage, because I understand what I'm getting, why I'm getting it, and how I'm going to be protected when a claim arises, when an event happens, right? Because everything is sudden and immediate. Nobody thinks, yeah, I'm going to get in an accident today. Like nobody drives on the highways like, yeah, I'm gonna crash into somebody today, or I'm gonna leave my home and it's just gonna be on fire when I come back. Nobody says that, right? Nobody thinks that. So you want to make sure you cover the events that you aren't aware of and that could happen, because it couldn't happen to everybody, right? So again, if you go cheap, you're gonna get the bare minimum. You're gonna get the bare minimum coverage. You're gonna be paying an extra $20,000. You're gonna be mad at the insurance company for years because you decided to save 20 extra dollars, right? That's two Chick-fil-A meals in a month. You save 20 extra dollars and now you're, or 30 extra dollars, whatever it is, and now you're liable for 20 to $30,000, even more, right? And it's not only your fault for not educating yourself or not seeking the education, but really it's your agent's fault, right? Because if an agent told me, "Hey, I just gave you the best price," I'd be like, "Okay, like what did you take off? You know, what? How did you just give me such a low premium? Like, why am I went from paying 350 to paying 150, right? What did you do to change that?" And a lot of companies right now are quietly reducing their coverage and increasing their rates because they can't handle the amount of claims that happen from other insurers or other insureds. Whether that be with auto accidents last year in Texas, we had over 234,000 car thefts, right? Just in Texas. So think about that. That's all vehicles that have to be paid for. And the only ones that are being paid for are the ones that have proper liability coverage. Because if you have 30, 60, 25 and your car gets stolen or something happens to it, it gets in a wreck after a theft, you're only gonna pay 25,000. They're only gonna pay 25K to get it out unless you have a 2003 Oldsmobile. You don't need the vehicle that much. You don't drive it that much. You might be on Social Security. You might be in retirement. Then fine. 30, 60, 25 is perfectly fine, right? In that scenario. But whenever you are a normal working person driving to work every single day, having 30, 60, 25 is a fallacy. And you're going to make sure that you are saving your money when really the insurance company's like, okay, like we don't mind paying 25K. We're backed by 5 billion, 3 billion, 10 billion. 25K is nothing. We'll pay that every single time because you weren't informed, right? And even in the event of a lawsuit, one of the biggest things here, um, companies will only chase lawsuits that they hold some type of liability for, right? So if I have 30, 60, 25 and I don't have an umbrella, I have $100,000 of my personal liability on my home. Again, these are things that you can review yourself. You can go over with your agent. You can ask your agent things about this. But if I have just those limits, $100,000, and somebody sues me, yeah, if it's above 300,000 or however much, the insurance company will pay that every single time because they know that you're responsible for 85% more of the cost of that lawsuit, the cost of the attorney fees, the cost of the legal defense fees, everything that goes into it. They don't have any liability. But if you have 500,000 in personal liability coverage on your home, you have 1 million, you have an extra umbrella, you have 2 million in personal liability coverage. They're looking at that client like, okay, they understand why insurance is here. They understand why we have such high market rate and able to actually serve clients that understand who we are, why we are, and how we actually work, right? So every company is the same. People say, oh, I'm just going to switch every year to try to get the best rate. No, dude, no. Companies favor you staying with them for a long time because they understand that that okay, I'm here and I respect the company. They have a good value within the company. I'm not going to lose any claim, right? They understand that. Whenever you keep switching over and over and over and over again, every year, every 6 months, you're just putting yourself at risk more and more. And you don't really have full coverage in a sense. You have you have dilated coverage. Like it's like your coverage is condensation on the side of the cup, and it can be easily wiped off by an insurance company, right? But when your cup is full and you have 500,000 in personal liability, you have 500,000 in your auto, 250 for your bodily injury, you have an extra umbrella, you have a life policy, right? You have all these things that you're actually using the company to benefit you and your family, then they will pursue any lawsuit for you. They will make sure they're backing your claim process. They will get the claim process expedited. I've seen people that say, oh, claims take 3 weeks, 3 or 4 weeks. Well, let me look at your limits, right? Because that's going to tell me how the insurance company actually views you. And if they don't view you as an ideal client, as a valuable client, they're going to take their time, right? They're going to take their time every time. But let me see an insurance company taking 4 weeks with $500,000 in personal property damage coverage or whatever it is. If it's an auto claim, they're gonna get that done in a week, easy, right? Even if it's a tough case, you'll see the insurance company literally fighting to make sure that they pay the less amount on that claim, right? So holding higher limits is gonna give you better coverage, and you're gonna have more of a substantial benefit from insurance itself, and not view it as something that you just switch every year to pay less, right? Or you just kind of toss around the most basic liability limits just to make sure you're saving money. Saving money is good, and I understand it's a hard economy right now, right? It's everybody's going through it, but at the same time, if you got an auto accident tomorrow and you're going to Chick-fil-A 5 times a week, you know, come on now. That's an extra $200 a month. That could be going to insurance. Even if it's 100, that could be going to insurance. And in the event that you get in an accident, you're liable for extra $10,000. How much more of a position, how much more of a decline position would you be in by going for that route, right? So very, very important things. And honestly, one of the biggest things I want you to do, of course, every video has a call to action at the end. I want you to go to your agent, talk to your agent, say, what are my liability limits? What did you give me, 6 months ago? What did you give me a year ago? Why did you give me this? Right? What was the reasoning that you gave me this? And if you're the one asking the questions and you're actually getting informed on what you bought, why you bought it, places like Lemonade, places like Root, I'm not going to hate on any company. I'm not going to say anything about them, but they make the process too easy, right? They make, oh, I can go online, get a quote, and get it done, right? That's all people care about. A quote, a quote, a quote. Let me tell you, those companies are not going to back you in a claim. You're going to have a terrible claims process. You're going to be talking to AI for 3 weeks straight. You're not going to actually have a real person that's backing your situation, that understands why you bought what you bought, and that is advising you on the proper steps to keep going, right? So I know within my agency, we always advocate for clients. We call the company themselves. We're going to make sure that we're following up on the claims process almost every day to make sure that the client is fully covered. We just had a home burned down here in Plano, and that client had full coverage. They had almost $3 million from personal umbrella to personal liability to auto liability. They had so much coverage that the insurance company paid everything fully, and their home wasn't even close to $1 million, right? So they understood the benefit of insurance. They understood why people buy it. And it's not just about chasing the lowest rate, because for then you're just fooling yourself, right? So again, go ahead and look at your agent, talk to your agent. If you don't have an agent, or you're just buying policies off of Root Insurance or Lemonade Insurance, shoot me a call, shoot me a text. I'm right here on the screen right here, but shoot me a call, shoot me a text. And especially if you're in Texas, I definitely can help you out. If there's anybody that's out of the state or anything like that, I have some other agents in some different areas that can inform you and advise you on the proper steps to get you the right coverage. Even if it's not breaking the bank too much, you'll have a lot better coverage, a lot more cohesive plan, and you'll actually understand why you're buying it, when you're buying it, and how it works at claims time. So I appreciate you guys for watching the video. I'll see you guys tomorrow. Have a great one. Bye-bye.